Well, IOC is the next company on our radar. The country's largest oil marketing, oil retailer, really, and one of the largest public sector companies as well. Third quarter was weak, but I think the interest really with regards to IOC, and of course, I mean, I think I can safely say IOC management can speak for the OMCs, the other two OMCs as well, is about the future. We have Mr. A.S. Sahney, Chairman of Indian Oil Corporation, now joining us. Mr. Sahney, it's a pleasure having you with us here, sir. Thank you for taking out the time. So all eyes on the LPG subsidy, I think. Will we see the LPG subsidy coming in, and by when?
Actually, we have to see it in a very big perspective. It's a large perspective. This system of buffer account was established in 2020 May. And since then, it has been working fine with the industry as a whole. And once we have been given the subsidy amount of something around 22,000 crores or something for the industry in 22-23. And now again there is some deficit, and we are very much confident, and our government is totally seized to the situation. And we are in talks with them, and we are very confident that by the end of this quarter, we will be in a situation wherein my balance sheet will be healthy enough to support my working capital as well as my capex requirements.
Okay, it will come, right? And we've asked, our colleague Shireen asked the secretaries after the budget, etc., the government secretaries, about this particular matter. And I mean, the government has been maintaining that it will come. You're absolutely confident that there's not going to be any slip at all?
No, we have been given assurances, and we are pretty confident.
So on that point, if you could just tell us... Yeah. Yes, please continue.
No, I'm saying that it all goes into the big story of capex, because we as sector are growing, and we as sector are required to grow if the Indian growth story has to continue, because we are there to supply energy to the nation. And once this energy supplies and the energy requirement of this growing nation are growing, and they are going to be in another decade or so, they will be doubling. So with double the energy requirement, we have to go on investing, we have to go on doing capex for meeting the requirement, for making these fuels accessible to the general population and to our customers. So this is going to be imperative that we have to have our... Yeah.
So just trying to understand...
Just 1 minute, sir. Mr. Sahney, just to complete this point, as an investor in oil stocks, told me, and I had to check the numbers, but I think they're broadly correct. For under recovery of 28,000 crores or so, LPG under recoveries, market cap loss across the three OMCs has been about almost 3 lakh crores. So I'm sure the government is obviously, you'll have to, it depends on what point
the matter.
The matter. And you're saying the amount will come in full before the end of this particular quarter, right? You're giving that assurance.
We are getting those indications. But as a point of, when we are talking of capital appreciation, or when we are talking of the stock performance as it is, I can give you a good number which you can refer to, that in the last 10 years, Indian Oil has got the capital appreciation of 11% XIRR plus around 7 to 8% depreciation. So 18 to 19% XIRR return has been delivered by Indian Oil in the last decade to its investors. And this story, we are confident that it will continue.
Absolutely, sir. I mean, the oil marketing companies, refining and marketing companies, they have been wealth creators. But just to go back to the numbers, sir, now 9 months your under recoveries, LPG under recoveries were, I think, around 14,300 odd crores. Where do they stand now? And our colleagues in Delhi were actually reporting that the government could be looking at setting up a new fund, the Oil Development Fund. And I think maybe this is FY26 onwards. So if you could tell us for this financial year, what is the, the help that you will need to mitigate the under recoveries for FY25? And what are you hearing about this fund from FY26 onwards? Apparently, it's for LPG as well as fertilizer, any sort of shortfalls or under recoveries. So if you could give us some more clarity.
No, that for fund For fund, I can only say that it is only, as you are also hearing, we have also heard about it, but it is only maybe very on the drawing board. If at all it is there, it is on the drawing board. It is nowhere near implementation as of now. That much I can tell you. Then regarding the numbers can, your number and my number can vary, and we don't want to commit on those numbers as of now. But yeah, it is somewhere in that range, whichever you are telling. And we are very confident that we will be giving a good, healthy year-ending report by the end of 31st March.
Okay, all right, Mr. Sahney. Hi, good morning, and good to have you on the show. Let's talk about the company as well as the Indian economy, because I'm looking at the January as well as February growth in FASTag collections. It's been very, very strong. Obviously, it has an element of the WPI-linked toll rate hikes that we have seen. My question to you is, have we seen very, very strong retail demand for fuel in Q4 so far? We're more than halfway through Q4. Is that the sense? Just trying to collaborate both the details, the FASTag collection, as well as what you're seeing on ground? Diesel
was subdued in last quarter and the quarter before. It was around 2% or 2.5%. Now it is picking up to 4 to 5%. It has already picked up to 4 to 5% growth in this quarter. Diesel, it was always 6 to 7%. Now I am seeing it around 7 to 8%. So MS is 7 to 8% right now in this quarter, and diesel, it has risen from 1 to 2% to 4 to 5%. So this is the kind of growth that we are experiencing right now, and this is a pretty healthy growth to see.
So better times is what we are seeing in Q4 in comparison to what you see in the past couple of quarters, which is heartening both for your company, for the the companies in this space, as well as for the economy on the whole. We got that point out of the way. Let's focus on Russian crude.
Of course, because
I want to ask you about the sourcing of Russian crude.
No, of course.
Could you help us out?
Yeah.
How much are you getting from Russia as of now? And that advantage that we had with regard to imports coming in from Russia, that there has been a bit of a decline. So could you tell us what was the difference earlier and what is it currently? I believe it's come down by a couple of dollars. Go ahead, sir.
Yeah, Russian crude is not a game changer. Neither it was earlier nor it is today. Because as you see, it is a game, it is a total sum game of what is my crude buying price or crude procurement price versus what are my cracks. And that gives me the GRM. And GRM is one part of the story that is giving me the refinery margins. Plus, I have a second basket which gives me the marketing margins. So, refinery margins plus marketing margins give me the combined profitability of any OMC that we are working in India. So, that Russian crude coming or not coming or coming at a lesser level is not going to affect my profitability to a very large extent. And I'm talking about myself and for other OMCs also. That they are, because availability is not an issue today. Availability of energy, availability of crude is more than what is required by the world today. So that supply demand is driving the total cost of procurement of crude for me and for other OMCs also. And wherein we are pretty comfortable sitting today.
Yes. As a percentage of a mix, how much is it?
We have to go back into the history. Before Ukraine, it was less than 2%. After Ukraine, last year, it was 30%, 34% odd. Today, it must have come down a certain notches, but still it is forming a good portion because we are taking all the clean Russian barrels. Clean Russian barrels, I define wherein the entity which is supplying to us, the insurer of the vessels and the vessels themselves, they all have to be non-sanctioned. And if they are non-sanctioned and they are below $60 or below that cap, whatever has been applied by the sanctions, if they are there, we are honoring them and we are taking them. Other than that, any shady deal, we are not there.
Okay, good to know, sir. Absolutely. You have to abide by international rules, right? Speaking of international rules, let me ask you this. We were asking exactly this to Mahanagar Gas also yesterday. Given the geopolitical dynamics, it's very clear that India is going to be sourcing more US crude. The minister has already said that, right? Now, I want to understand what that is going to mean for a refining giant like IOC when you have more US crude in the mix, and then, Russian crude will be what it is, like you're saying. what will it mean for your profitability? And give us an outlook on GRMs as well. GRMs were a disappointment in the third quarter. Do you see them recovering in Q4, Q1? By how much? And what does it mean to have more, to have to ship more US crude to put through your refineries?
First of all, any crude coming to India will come on economic considerations only. That is one. We will have intent. The intent has been given by government. We will follow that intent. But any decision of crude procurement is taken based on economics only. That is the only driving force for me. And I have an advantageous position because I have 9 different refineries with 9 different configurations wherein we can very well take almost any kind of crude that comes to Indian shores, including the American crudes or Canadian crudes or Mexican crudes or today's Guyanas or Argentina crudes, which are the new entrants to the crude market. Including everything, we can produce or we can consume and we can process almost every kinds of crude because we have a very wide variety of processing schemes available in our refineries.
No, sir,
so we are
absolutely.
very comfortable.
Absolutely, sir. Your refineries are state of the line, top of the line. We were trying to understand in terms of costing, when there is more US crude in the mix, what does that mean for margins and profitability?
They have to be competitive. That is what I am saying. For each refinery, for each processing, for each tanker that is coming to my shores, it has to qualify on the margins. If it is qualifying on the margin, it's the best deal for me, then only we are going to take it. And that we are sure that the logistics will have to be worked out in a better way. The pricing has to be done in a much better way so that it becomes palatable for the Indian market. And anybody in India will buy any crude only based on economics, nothing else. It is we are not just because it has to be taken from a particular geography, we will take it from there. We can take it. We are free to take crude from any geography or any country based on the economics only.
And so the GRM levels, just very quickly, 10 seconds. Where are GRMs now? Q4?
GRMs are improving. Last quarter was bad because we are getting the cracks which had gone very low. Last year they were around $18, $19 for diesel. They had gone down up to $7, $8. Now they have improved to today it is $11 or so, $11.5. So the cracks are improving. The crude is coming down. Crude earlier it was when we were talking last time it was around $80 or plus. Now it has come to $72, $73 Brent. So now the crude has come down. The cracks are improving. So I see a better Q4 and a much better Q1 going forward.
All right, Mr. Sahney, it's a pleasure. Thank you very much for addressing all those issues. And it's great to see you on the program and on the channel. And I hope we're able to do this occasionally and frequently. Really good to see you. Thank you very much for joining us here.